Uncensored live Q&A session. My name is Danny and I will give you the session today. Before we will begin, as always, I would like us to go through a quick sound check to make sure that the sound is in a proper level and that the screen here is visible for the audience. So please use the question section to comment that the sound is okay and that you can see my screen. So I will explain what will happen in the webinar, okay, in each and every step. This is the agenda. So first we will go through the previous questions. Those are questions that we've received from previous webinars, from this previous webinar, from other webinars, and so on. Then we have the dynamic questions, which are questions that you guys can ask along the webinar. And this webinar is called Live Questions and Answers. Okay, so feel free to ask whatever you want. This is your basically this is your chance to see the answers live to your questions. I can demonstrate them on the platform right here, and that could be an amazing solution. Okay, so take advantage of the webinar, which I'm gonna put it down here. And then on the third part, I'll share a bit of information here. You see the links. To save you the trouble to look for certain things. And analysis is it's saved for the end from a simple reason. If there will be questions about analysis, we wouldn't want to waste time and do it again, okay? But if we don't cover the analysis part through the questions themselves, so we can have this nice addition and use this to demonstrate. Now, any capital markets and trading information disclosed in this webinar is provided for informative purposes only. It should not be constructed or applied as an investment advice, a recommendation, or a suggestion. I'm going to tell you guys that the most frequent questions that we received almost every webinar is if the webinar is recorded. And it's pretty fun because I'm stating it in the beginning of every webinar, so I can tell you to calm you down. It is recorded. You can see it as many times as you want in our channel on YouTube. Yeah, but if something is not fully understood, feel free to stop me and ask before I carry on. Okay, so let me just go for a few moments just to make sure that it's recorded. Then I'll be back and we will begin. Thank you very much. Okay, so everything seems exactly as it should be. We can hit the road. We're gonna look at the questions. We're gonna look at the previous questions, as I said. Okay, let's get ourselves a nice place for the notes. There we go. And then we can simply let's first review the questions, and then we're gonna pick which question we want, and we're gonna paste it down here and start solving it. Okay, let's begin. Okay, so how can I know when to close a position? Okay, this might sound like a simple question, but it's not. Okay, this is, what do you think? Let's just to begin with, what do you think that is the best time to close a position, right? How can I know when to close a position, right? You've opened a position, you're making a profit, you're making, God forbid, you're having a loss. How do you know when to close it? Okay, is AvaTrade sending signals? No, I'm kidding. Of course, we have a solution for that, but to be frank, the answer is no. I'm going to show you the signals that we do have by Trading Central, but AvaTrade does not produce signals. Can I do automated trading with AvaTrade? Yes, the answer is yes. What is the benefit of trading assets on the same group? Okay, so same group, meaning, if I understood this question properly, if it's commodities, so it's a group, could be gold and palladium and all those guys. You have the other group, also crude oil and Brent oil and wheat, and all of those are also commodities. Also, same group can be various kinds of currencies. Okay, we'll play with that. We'll put it down and we'll play with it. Can I change the spreads on my account? Well, let's get to that. Let's get to that. Let's keep it at the bottom of the list as it's probably the most difficult question in here. Okay, how can I? And like I said, guys, regardless those 5 tiny questions, you can still ask whatever you want. So if something you want, you can just paste it. I see people using the function to raise their hands. You don't, again, the format here is you don't need me to give you permission to write down a question, guys. So you can just ask what you want. Okay. All right, so we're gonna take, like I said, the question and we're gonna start solving it. So the easiest way to know how to close a position is just to look at the balance. And to before I carry on, just to clarify here for the people who are not using the web trader, this platform is on the website. You don't have to download or install anything at all. You're just logging in with your email and password, and you're gonna see this way. If you don't, so you can contact the customer service. Okay, I'm gonna put down an email here, customer service at avatrade.com, or your senior account manager, and they will apply it. They will apply it on your account, and you're gonna see it this way. So you can perhaps enjoy the same functions that I'm using, which could be extremely helpful. Okay, so the web trader, like we said, the web trader. Let's pick an asset for the demonstration. The question was, how can I know when to close a position? We're gonna actually, because we spoke about commodities, it can be pretty useful. Something is happening down here. Okay, culture. What about the cotton? Looks good. Corn. No, something is on it already. Okay. All right, so the way that I've done it was manually. Okay, I choose it through the lists. I went to agriculture, underneath commodities. You see this umbrella, I click on the arrow, it falls down. So I click on agriculture, then I click on corn, and it opens immediately the chart. Then I have those two tiny arrows, which I'm going to click and expand the screen up. Then sell or buy to open the lovely sidebar to the right. And like I said, a question here is when to close a position. When to close a position. Basically, this part is when to close a position. So when I open a position, okay, whether if I'm making profits or loss, how can I know when to close my position? Anybody knows that? Let's suppose I took a buy with corn, right? With, let's say, for the sake of the example, just to show you guys one nice thing about the web trader, right? So sometimes there is a confusion between the lot size to the units. So for instance, if I want to take, I don't know, so many units, right? And I'm going to put here the lot size on MT4 and MT5, it's not going to simplify how many units I have. It's just going to show me the lot size. But in here, I can say I want to take 50 units, which is half a lot, right? One lot, 100 units. It's one of the things. So let's suppose we have 50 units, okay, 50 units, which is 0.5, okay. Now price, oh, sorry. Let's begin with entry price. Let's suppose it was Let's suppose it was 490 for the sake of the discussion, and the now price, as you guys may see, is 475.25. Okay, and let's make it a round number just so it will be easier to calculate. Okay, in this scenario, what's happening is I do want to help, but I don't want to reveal the answer. You know what? Let's use it anyway. Right? Let's use two scenarios. There is a buy scenario and there is a sell scenario. Okay. Let's suppose that this indeed is a sell. Okay. We have it open since 490, right? What was the price? 490, 25, yeah. Okay, I'm going to explain exactly what everything here means. So don't be confused by that. Can you explain the spread on AvaTrade on Bitcoin and also can find? Look, the thing is, Cynthia, my place is not to determine those kind of things. So unfortunately, it's not something that I want to review presently. It's something you need to check with your with your senior account manager. Because I can never know what is applied on your account. This is why I can't reply to that. But I'm sure if you will attach a nice screenshot to your senior account manager, he will know how to help you. We have another question coming. Natukunde, among the slots, which ones are appropriate to use? Micro lots, standard lots, mini lots. Okay, that's actually a wonderful question. So first of all, thank you. And we're going to take your question, sir, and we're going to put it right here, and I will address it in a minute. Not specifically a minute, but maybe we'll have the answer right here. Okay, let's play with what we have. Now, what are those things that I was marking, right? There are boxes here. I clicked on the boxes. Suddenly there is a price. There is a number here. What is this number? So to simplify the situation, obviously I can't go back to the past and take a position at 490. But the way that I'm showing you this is through pending orders. Pending orders, okay, it's very easy to understand. Pending orders are automated orders triggered by reaching the targeted price. Right? Now, how did this work exactly? Let's suppose that I want to take a position at 490. For some reason, I think that now I'm a bit insecure because I see now it's bullish. It was bearish twice before. Now we're looking at, just to clarify, guys, we're looking at weeks. Okay, perhaps I should have a swift guide through just to wrap ourselves around the toolbar here. So this is the search field. We saw that. We have the time frames. To enjoy the full content, I have to drag up or down or scroll the wheel on my mouse. Then I can change the shape of the chart. Here I can determine the crosshair that will give me details or no crosshair, just to click and drag. Okay, we're going to use the crosshair because we do want to have the numbers down. The rest is, for now, maybe it's irrelevant. We'll see it in a moment. Okay, and the way that I've done it, this one, so like I said, the way that it works, pending orders are automated orders triggered by reaching the targeted price. In other words, for me, if I would have had a position at 490, okay, why can I do it? I can do it because this pending order, execute when price hits, works the same way exactly. It work with triggered by reaching the price. So if I marked on a sell and I marked with when execute when price hits, that means that by reaching that price, don't worry, I will show it how to. I'll show you how to do it later on. That means that by reaching that price, that's going to launch a sell. It's going to launch a sell. You see, execute when price hits, it's going to launch a sell, okay, with 50 units. Now, that means that if it's launching the sell here, and my take profit. What is exactly take profit? Take profit is also working the same way, okay? It's triggered by reaching the price. It closes the position with the profit if it gets down to the price. So for here, let's suppose that this is the start. Okay, it's neutral. Take profit. Oh, we still haven't modified the profit. Okay, we still haven't modified the profit, but let's suppose that the profit is just a little higher than what we're having now. Let's suppose that it's 480. I'm not sure it's gonna let us see that. What about now? Yeah, perfect. Okay, there we go. So you see, what I want to get closer, I'm going to change the time frame to look at the closer scope, like a smaller scope. Okay, when I step out, when I go from days to weeks, I'm stepping away from the market. I see a larger angle. Yeah, so if I sell here and it reaches down here, that means that my potential profit is 500. How so? Because the difference is between 490 to 480, the impact is $500. To your question, na to Kunde, is that the result is determined by the difference between the entry point to the take profit. In this case, again, I'm not obligated to use any of those, right? I'm just answering the question, which is, how can I know when to close a position? Now, in this scenario, let's suppose we have 10,000. We are making $500 in this hypothetical scenario. Okay, and let's go vice versa. Okay, I think it's pretty fair. Okay. Yeah, let's suppose that in this scenario, the question is if I can, well, it was pretty easy. Just a second, guys. Okay, the question is, if now, let's put it in red, that this is supposedly where we lose, this one is where we're in profit. Okay, how can I know when to close the position? Let's, Leslie, hello, I do not see AvaTrade screen. Just a second. Oh, you mean maybe you don't see it this way, Leslie? Maybe you're seeing it differently? Could be. Did you log? Are you trying to log into the website with your email and password? Maybe you need to contact your account manager or the customer service to apply it on your account, as I said in the beginning, because it doesn't appear for everyone. It should. It's 99%, but sometimes it's not applying, okay? Yeah, so in this scenario, if I'm selling here and it gets down there, because this is $10 difference and I have 50, I can make 500. If, God forbid, it goes against us the same laugh, right? From 490 to 525, I'm losing 500. Very, very simple. Now, this is the answer to your question, not to Kunde. Okay, and this is also the answer for us. So when can I close? Well, the question is actually when to close a position, right? I mean, I can basically delete that part. When to close a position, right? No, I'll keep it. I'll keep it for now. And that is entirely up to me. Now, I can close it automatically, as you already figured, because again, what it says here, those are orders triggered by reaching the price, right? Waiting to view AvaTrade webinars. Oh, okay. I have absolutely no idea. Can the rest of you guys see my screen though? Can you guys see it? Not sure if it's working or not. Maybe it's only you, Leslie. Mario, okay. Everybody else seems to see fine. I don't know, Leslie, what could be the issue? Maybe switch browser. Anyway, as you can see, when I'm selling here and it gets $10 down, because we're having 50 units, we're gonna make 500 profit. right? If it would have been a buy scenario, it would have been vice versa. Now, how does this even help with, how is it helping us to decide when to close a position, right? Well, it's very simple. If I have a goal in the beginning of the trade, my goal this week is to make, let's say the goal, just a second, my goal is to make, okay, let's suppose $250 in a week. Okay, and I'm looking at this position, and this position already making me 500. So can I close the position? Absolutely. Okay, on you, I have been special. Well, Leslie, I'm not. I wish I could help. Really, I wish. Just technical. I can help you with trading inquiries, but I can't. Technical inquiries are beyond my understanding. But try to contact your account manager or your customer service. I'm sure they will assist. So how can I close the position? How can I know? Basically, the idea here is if you define a goal, if you have a guideline, if you have any number that you're aiming to make, obviously, if you reached beyond that number, you can close, or even when you reached that number. When you don't have a goal, you can look at your account and you can simply think about a percentage, perhaps as an example. Let's suppose you want to make, I don't know, 10% in a month, right? 10% in a month from 10,000. That means $1,000, right? Making 500 means that I still supposedly I can't close a position because I need to make another 500, but I can open another position, okay, and close that one. What I'm trying to say here, guys, is there is no specific rule to when to close or when not to close a position, right? It's entirely up to you. But what can help bring more logic is numbers, guidelines, goals, certain way to measure your strategy, basically strategy. What I'm saying here is if you have a strategy and you have defined certain things, you'll always know when to close the position, okay? You can also look at the margin that you have left, right? I mean, even if you don't have a strategy, you don't have a defined plan, and still you're hesitating, sometimes you're holding a position for too long, you can look at the margin and think whether if to keep it or not. Okay. The other way that the other thing you should consider is also called swap, right? The swap is an overnight fee, and when we're holding a position overnight, we will be charged with a tiny amount, with a proportional amount to the value of your position. Okay. Okay, so my answer to this is actually very simple. If you have defined goals, you can close the position according to your goals or strategy, we said. And if you don't, obviously, if you don't have specific guidelines, what you can do is you can basically look at your balance, look at the margin. You can follow your risk money management. That means that if I have a position losing 9,000, I'm just taking a hypothetical scenario, right? Don't kill me for that, but I don't want to just mark a V on this question. I really want to give my best answer to it. So if you can, let me just look back to, oh, right, the risk money management. So if, God forbid, this position wouldn't lose 500, it would have lost, oh, sorry, something doesn't make sense. No, it does make sense. And the take profit, we're going to change it to 480. 480? Oh, yeah. So you see 5,000. If God forbid this is, oh, it's working. You see, thumbs up, it works. Sometimes things fix themselves. So if I'm looking at this scenario, this 5,000 now, not 500. What do you think? Should I close it? If God forbid I have a position at this scenario, should I close it? 5,000, or I should keep it? What would you do? Let me simplify. If I have a losing position for $5,000 out of my balance $10,000, okay, what do you think? What do you think should I do? Should I keep it? Should I maybe open another one? What do you think that is the best thing to do? To wait? Maybe to wait will be also a good idea. I just want to explain to you something here. Let me write down the equation here. Where's the formula here? Let me do it otherwise. Units multiplying movements equals summary, right? Ooh, okay. People started writing, close immediately. Dave, I wouldn't wait a minute. Okay. Who else thinks that I should close it? That you would have closed it immediately, like Dave and Leslie here. Okay. Who thinks that I should keep it? That would have kept it? Okay, so followed by the equation here, let's do it otherwise. Okay, summary divided by units equals movements, right? If I'm looking at here and I'm looking at $500, 500 units, every dollar that corn go against me equals to $500. This is how we got to 5,000 in the first place, right? $10 difference, 500 units. It means that each dollar against me is valuable to. But by the way, I can't even open this position just for the refreshment. I'm using it as an example. I don't have enough margin to occupy such a position. But if I would have, if I had enough, I don't want to get into that. But let's suppose that I could have had this position. Every dollar against me equals to 500. This is what I should keep in my mind. Okay, we have dedicated a lot of time to this question, so I'm just gonna let it be. Regarding the signals, I'm just gonna show you here how the signals are, how they are. And the reason that I wrote no, that we don't send signals, is because we truly don't send signals. Okay, those signals are produced by the Trading Central. I can say that some of them are pretty good, pretty well, more than good. I'm gonna give you some tips how to use it efficiently, not just to randomly click, even though you can. Let me just show you how simple that is before I will explain. Did I paste the question? Not yet. Okay. Let's get it down here. Okay, and the way that this works is extremely simple. I'm just going to go here to the section. We'll speak about the advantages that we have picking a signal through the section or from the outside, which is here from the lists. It doesn't really make a lot of difference. The only thing is that if you go to the signal section, you see it's lined down by the production time, and from the outside you can't see that. And it does have an impact on how the signal will be. Okay, and the reason is the signal is analyzed on a certain price through certain scenarios. That means that I'm looking at copper as an example. I'm going to click on view signal. That's the first step. Then I will expand it. Okay, and I see that this picture here is daily picture. And I'm looking at minutes. This is why I'm not going to go all the way up with the numbers, which I would like to see. So I'm going to set it to daily. See daily. Now it's daily. And I can see through the numbers. And this signal is made with a buy scenario and a sell scenario. You remember I said a few minutes ago there is a buy scenario and a sell scenario. How does that work? We have certain levels, support and resistance. What are support and resistance? Support and resistance are levels, edge points on the chart that can potentially help us indicate where the asset is heading to. Again, it's not a defined formula. Even if you look at support and resistance for hours, it doesn't mean that you will determine precisely where the asset is going to land. Nobody can do that. But we can try, and we can look at the pivot points that is analyzed here through the signal. Now, what I mean by that is the signal is produced on that price with those scenarios, with those ambitions. Take profit, we spoke about it. It closes the position with a profit. Stop loss stops my position with a loss. That means that it's already here as part of my signal automatically. I don't even have to think. Okay, I'm going to do that. Again, I'm going to do that because I don't want to rely purely on the signal. I want to make sure everything is that it should be. And then I choose buy or sell scenario. Now, I can look at the levels and I can decide, okay, the take profit is 3.9450. I'm just going to hit the buy scenario for now. Okay, and I'm going to look at the difference between the price that we have right now, 3.9230 to 3.9450. And I see that because we have 2,500 units, okay, and the difference is, let's see the difference. Let's make it back to the bare minimum so it will be a little easier for us. Because we have 100 units, right? And the difference is, well, apparently the spread is killing us. Okay, let's increase it maybe. Let's do it this way. Okay, so we can see that through 1,000 units, and the difference is 92 to 94. It's 20 pips. So we gain $20. Okay, very, very simple. Now, if it goes against us, if it goes, we are with a buy. If it goes down by, well, it's a little more than that. 30 pips. Okay, so we make $30. Okay, now this scenario is pretty recent, but as you can see, the production time is lined down to when the signal was produced, which I can find here in the signal section. But if I go outside, I can never know when the signal was produced. Okay, only if I click it and then I see. It's just a tip, like I said, to help you use it a little more efficiently. See that it's been a time since it was produced. I guess, I don't know if I talked about it in this webinar, but yesterday I spoke about it. Because the signal was produced on that price, the scenarios and the prediction whether going up or down to a certain level can already be occurred. It's possible it already happened. This is why if you apply it by the take profit and the stop loss you have here, you might not enjoy it as much as you would have had if you would take it as soon as it was produced. Okay, you gotta make sure the levels That's, by the way, this is why there are signals that are already expired. You might look at, see, as an example, this one. Let's go outside. I want to show you. Oh, we're still in the section. You're gonna see things sometimes it doesn't have the. You see, silver doesn't have it. Silver doesn't have any signal. Could be that there was a signal, it already passed, was analyzed, and the levels are no longer viable. Okay, I don't want to delay about it too much. I guess it's pretty understood how to use the signal section in our website. It's pretty straightforward. I just have to click 1, 2, basically two times just to initiate a signal. Everything is already in here. It's very convenient. No, but okay. Signals on the web. Trader provided by Trading Central. Okay. Pretty straightforward. We're gonna nail it to the signals. Oh, signals. There we go. Web trader. Okay. Looks pretty good. Can I do automated trading with AvaTrade? Absolutely yes. Yes, there are 2 ways. One of them is duplicate trade. Okay. And the other one is AvaSocial. I'll just explain in a nutshell about the differences. Okay, so AvaSocial, what it lets you do is it lets you follow other traders. You're gonna see lists of traders. And you can rate you can pick who you wish to follow. Okay, let me just paste the question down here. Okay. And what happens is you choose your trader. You can follow someone. You can follow. That means that you're gonna get the one that you're following. You're gonna get his position, and it's up to you to decide if you're gonna go ahead with it or not. And you can fully automate it by copying somebody. So you have follow, and you have copy. Oh, maybe I'll put it this way, copy. Your traders trades can execute or not. In here, follow completely automatic. Okay, very, very simple. That's how it goes. With duplicate trade, it's a little different. You're also copying somebody. If you're using duplicate trade, what's gonna happen is you're gonna pick out of different strategies, and from the strategies, you can also analyze the strategy a long time and see how successful it was and get a nice data sheets. Okay, and review it. You can also do it with AvaSocial, but it's just following somebody versus copying somebody. So obviously, if I want to copy somebody, first I want to see how it goes and see that it's good for me. I don't want to, God forbid, somebody to follow someone who will lead me to my losses, right? So I have to first check if it's good or not. With duplicate trade, it works similarly, but a bit different. You have different strategies which you can pick from. Both cases, you have to sign on an agreement that you allow that you basically accept. Like I said, this is just on a nutshell. The agreement is very, very straightforward. It's very easy to go with. There is a little markup when you're following somebody. I guess it makes sense. It's logic. What else I can say? Yeah, just do the research. It can be very, very beneficial. Just do the research. Don't dive before, you're picking. Just make sure you're picking somebody good. Okay. Yeah, did I write it down? Oh, I did. That's good. What is the benefit of trading? Oh, that one is good. So, guys, what exactly that question is all about? What is the benefit of trading assets on the same group? Okay, so guys, what is the benefit? Let's suppose that I'm trading stocks. Okay, stocks, and I have underneath what I have is Apple, and then I have Boeing, and then I have I don't know what else, Tesla, and you know what, Nike as well. What do you think? And Nvidia. They are all stocks, right? There's no question about it. What is the benefit of trading assets on the same group? Anybody knows? Is there a benefit doing that? Or it doesn't make a difference if I trade Nvidia and coffee and what else? Something random, Nasdaq, and what else? Random and Bitcoin, right? I don't want to get this involved, not for now. What do you think? Is there an advantage using trading? Is there an advantage trading the same assets, trading the assets on the same group, or not? Or it doesn't really make a difference if I'm taking one from this and one from that? What do you think? Is there any advantage or not? It's easier with analysis. Okay. Thank you, Tim. How exactly is that easier with analysis, Tim? If you can elaborate a little bit. They're all related to the economy. Okay. Pretty. Okay, that's good. They're all related to the economy, but isn't it that any asset that I'll pick is related to the economy somehow? No, it's not a mistake. It's not a mistake. I'm saying it does have, to my personal opinion, it might have an advantage, right? How does that work? Let's suppose that I'm looking at a certain group of assets like stocks. Stocks might be a little more individual, but if I'm analyzing, I don't know, commodities as an example, and I'm looking at silver and I'm looking at gold and I'm looking at, let's replace that. Maybe I've picked the wrong group as an example. Even though just for the protocol, still it has an advantage, and the reason is they are, like Tim wrote down, they are related to the economy and they could be part of the same indice. Indices are an umbrella. If stocks is an umbrella that is called stocks, indices, index are also a group by themselves. Nasdaq is also a group. It has made out of 100 stocks, right? Tech stocks. This is why it's called. Let me show you. US Tech 100, right? So if, for instance, I'm looking at the same, I'm looking at an asset from the same group, I'm analyzing assets from the same group, it could be an advantage. I could know if there is something that impact, I don't know, several tech companies. By analyzing Nvidia and Intel and God knows what, I can save myself time, right? If I'm looking at eBay and Amazon, which are both e-commerce-y, they're both stocks, they're both under the same group, it might be an advantage, okay? Especially if they're competitors. Just hold on, guys. Okay, so like I said, there is a certain benefit. There is a certain benefit, especially when it comes down to things like safe haven. Okay, if I'm looking at the commodities, So we have silver, we have gold, we have sometimes, I don't want to put down copper, but gold and silver and platinum can also be attached. Those things respond heavily to the dollar. Okay, this may be less, but gold and silver, absolutely. And oil, anyway, there is an advantage. There is an advantage. It's not, again, a formula, but you can find similar movement. Let me just show you before I carry on. Okay, so this is gold in the past few weeks. This is comparison to silver. Just a second. Okay. This is not the same chart, guys. Don't be confused. This is gold and this is and this is silver. This is gold and this is silver, and still this is the same. It happened on the same dates. I don't know if you guys getting my point. No, hold on. Okay, we're looking at different assets that looks very similarly on edge points when fundamentals occur. And they occur, as you can see, through those 2 weeks. We have very bullish candle, same apply here, and vice versa the following week. Same apply with gold. Doesn't mean it will happen all the time. It doesn't even mean that it will happen the same ratio as I'm showing here the reference, but it could lead to it, and it could save you a lot of time if you're going through the same assets on the same category. Okay, not for everything, but like I said, it could be a benefit. This is why what I'm gonna write down here is how can I write it down? Naturally, assets under the same group can be correlated and be related with fundamentals as well. Okay. Nevertheless, currencies, obviously, if I'm analyzing the dollar and I'm trading anything that is against the dollar, so I can enjoy. So for instance, let me just show you just as an example here. Let's go with the euro, right? So let's suppose I'm analyzing the euro. What's happening here is the euro versus the Canadian, right? Now, when I'm looking at this chart, I understand that. What do you think if it goes down? What does that mean? That the euro is getting stronger, or weak, or the franc is getting stronger? What do you think? Again, it's not the franc versus the euro, is the euro versus the franc. This is how many francs you need to buy a single euro, to acquire a single euro, right? So that means that if the chart is going down, that means that the euro is taking a hit. Okay, now, why is that helpful and how is that related to our question? Because of the reason that I explained a moment ago. If I'm analyzing the euro, this is the euro versus the franc. This is the euro versus the pound. This is the euro versus the Japanese yen, and here against the dollar. So if the euro is going down here, unless another currency, like if this is the euro versus the pound, You see, because the pound is also probably unstable. This is why when I'm looking at it this way, it doesn't seem like it's going down similarly to the franc. It's also possible that the franc is strengthening, and this is why it shows on this chart, euro versus the franc, that it goes down. If I'll pick Japanese yen, you see also here, it doesn't seem like it's going down similarly to the franc. Okay, so in this particular case, I can understand it's possible that the franc is strengthening versus the euro, and not that the euro is getting weaker. Is that understood? By the way, are there any questions? I almost forgot to stop and ask. Are there any questions about anything that I said so far? Any questions, guys? Thank you. This is amazing. Well, no, thank you for coming and joining the webinar today. So guys, I'm gonna carry on to the last question. Can I change the spread on my account? So I'm just gonna paste it down here and we're gonna try our best. The answer is no. Spread equals the difference between bid and ask, sell and buy price. It will be charged in the beginning of every trade, and it's based on a single units. Now, let's suppose that we're gonna get, what didn't I show you today? The problem is that this market is still closed, and though I wanted to show you today. What about oil? Okay, maybe gasoline. Let's try Brent oil for now. Now, the way that this works is very, very simple. You see here 0.03. That means 3 cents is the it's the spread for a single unit. What if I have 100 units? What will be my, okay, let's suppose that I take, unfortunately I can't take I can't take a single unit with Brent oil because the lot size is 1,000. So 1% of that is naturally 10, which means 3 cents become 30, right? The way that this works is the spread multiplied by the units equals minus in the beginning of the position. Very simple. As you can see, it's not a crazy thing. It's very, very small, but it has an impact on your trade. Why? Why the spread has an impact on my trade, guys? Let's suppose I'm paying this 3 quid. Actually, it's not. Actually, this 10 makes it 30 cents. It's 30 cents. It's not, yeah. So 10 multiply 3 cents equals 30 cents. Why is that? Why does that has such an impact on my account? Look, I have $10,000 here. Who knows the answer for that? This one we already covered, right? I hope that this was covered. Let me just write down the answer just for the protocol, so it will be written. Units multiplied movements equals summary. In other words, multiplying units by movements can predict potential profit or loss. Units, that's the lot size. Lot size. Okay. That's how it's supposed to be. Just gonna narrow that down. Okay. Yeah. So the answer is, because this is a tiny position with 0.01, if I would have one lot, then it would have been 1,000 multiply that would have been $30, right? Let's just use a calculator so it wouldn't be a mistake. Okay. Very simple. Is that understood? Everybody understood that? Excellent, excellent. So that's I'm gonna write down. Oh, and what I wanted to say is, can I change the spread on my account? The answer is no. The spread, okay, that's good. And what I'm gonna write down as well is the spread is individual for every asset, and to change the spread on your account, contact sometimes might be possible through your account manager. It might be possible to change to lower spreads in particular case through your account manager. Okay. Oh, let me put down a whole thing. Okay. That's really different. It's different in every case, so I don't want to say anything too general. Actually, you know what? Let's keep this way for now. Okay, but it doesn't let us. Nope, that worked just fine. Yeah, perfect. Okay, unfortunately, I barely have time to send you the links. I'll try and do it swiftly. Sorry, guys, I wanted to give you the answer. It was important for me that you'll know that bit, because, like I said, it's very, very useful to know those things. Very useful. Can save you a lot of money during your journey with us. So I'm doing it quickly. There we go. And we didn't have time for analysis. That's a bummer. Okay, never mind. Hopefully next time. So the only thing that I wanted to give you before we say goodbye is this lovely special promotion code. That's the Q&A benefit for the one-on-one premium market review. And that means that you're going to get your analysis market review from your senior account manager. Just give him the code. They know, they are well aware about this promotion. And that's it. That's it. I thank you all for coming here today. I wish you all happy holidays and happy new year. And I'll see you in a week. So best of luck and have a good day.